Dennis, we talked earlier about Jill Marcus' comments over the weekend, not actually saying anything so new. Basically, what was quite apparent to me was the fact that she still had a growth rate for South Africa way above the estimates. Her growth rate was still over 3% for the year of 2012. And then the other thing that she said that I picked up was the fact that she said we shouldn't see this interest rate cut as the start of a new interest rate cycle. It's basically just the prolonging of the 2008 economic situation that they're trying to manage. Did you pick up anything else there that's of significant value to us?
Yeah, I think the main message was, don't expect interest rate cuts automatically at the next MPC meetings. If you look at what happened to the FRAs, the forward rates, as well as the bond market, after the cut, immediately there was excitement about another cut. So I think she's just trying to actually temper market enthusiasm for another cut. And obviously making the obvious point that it very much depends on the circumstances prevailing at the next MPC meeting.
All right. Now we did see that that consumer credit have actually grown a little bit faster than it did the month before, and that was still mainly due to the growth in credit card spending, in corporate spending or corporate credit card debt, and then that is still placing quite a bit of a worry onto the Reserve Bank because of the growth in unsecured debt, and we're not actually seeing a rise in the mortgage growth. Is that something that worries you, or are you expecting the mortgage growth to actually pick up during the year?
Yeah, mortgage growth is at 2.2%,
yes.
So it's very, very weak. We don't really expect it to pick up all that much. I think that there's structural issues around mortgages, and also bank experience has made the banks fairly cautious and negative on mortgage lending. But it is concerning that a lot of the growth is on the unsecured side. I'm of the view that we're not in a bubble territory at this point, but that it can't obviously be sustained at the rates that we've seen over the last couple of years. One encouraging point was, if you look at installment sales and leasing finance, together those two categories rose by about 10%. So indicating that there is underlying demand for certain asset-based categories. But you're right, the mortgage side looks fairly flat and dead at the moment.
Okay, we know that the unsecured side does come from a low base, as you mentioned, and not in the territory yet of a bubble, but still South Africa with a high jobless rate and not sustainable income trend in that sense. It might be a problem because that is so difficult to service, and it's also then it leads to those losses that we might see. We've also seen ABSA come out last week with the results not making enough provision for that loan book that they have there. And do you think that's a trend that we might see come through the other banks as well, or is it an ABSA story that you saw there?
Well, I think in the case of ABSA, they're under-provisioned. I mean, by their own admission now. There was an expectation that probably by now the housing market would be picking up quite significantly and they'd have lower losses on their mortgage book, but unfortunately that hasn't occurred. So unfortunately that's hurting their results at the moment. On the personal loan side, I think the danger is obviously with those very high interest rates that it does eat into disposable incomes, and households aren't able to actually expand consumption in future years. So it's something the Reserve Bank is looking at very carefully, as well as the National Credit Regulator, as well, I assure you, as the banks themselves, because they don't want to be left with the problem in future years.
But we have actually seen that the banks move to that sector because that's where they actually make the income, and where we have seen that tight squeeze on the mortgage side. But that's another discussion. Let's look at the July Purchasing Manager Index. We're expecting it to stay below 50. That still remains in that contraction area that's not so positive for the country. Do you actually expect it to come out of that below 50 segment anytime soon?
Look, I think the big difficulty there is that a lot of our manufactured exports go to Europe still. Africa's come along very nicely in recent years, but nevertheless Europe remains the biggest sort of trading bloc, and consequently it's difficult to expand vigorously in those sort of fairly depressed global environment. So we would expect it to be, again, as you said, below the 50 sort of level. And probably over the next few months, while we waver between even deeper recession in Europe or hopefully some sort of upturn towards the end of the year, during this period it will remain fairly neutral rather than in an expansion mode.
Right, that leads us straight into the new vehicle sales. We have actually seen a very nice increasing trend there, and that's definitely driven by the lower interest rates. People are able and are willing, actually more than able, to spend more money on vehicles, and that has led into quite a nice drive there. Is that also driven by the exports of vehicles from South Africa?
Yeah, but interestingly enough, exports to the rest of Africa in the motor vehicle industry is actually doing very well at the moment, and then the domestic side has been fairly well. It's basically held up quite nicely. So it just seems as though South African consumers just can't go without their cars, despite what's happening in the rest of the economy. They remain fairly, consistent buyers. What we have seen, though, is a move down into the more value area of the car market, rather than the more excessively priced models, if I can put it that way.
Yes. Now, if we just turn our heads a little bit to the jobs in South Africa, what we're seeing here, the growth in the economy, just like looking at the overall picture, if we don't see a stimulus in the economy, we basically won't see job creation. Are you at all worried about that jobless rate going much higher than we're seeing at the moment, or do you think it will maintain where it is, where we see it now?
Look, I think we're not likely to see much in the way of job creation in this sort of environment that we're in at the moment, with a lot of uncertainty about what's happening internationally, but also a fair amount of uncertainty about the local sort of environment as well. So I think on balance it will remain neutral. Your disaster scenario would be, of course, if you have a global recession, as opposed to just stagnation, which we're seeing at the moment. Then unfortunately you will see it coming through in areas like mining and manufacturing, which of course would be very negative in this social and political sort of environment that we find ourselves in.
And we know this is a key focus for the political arena. We heard that interesting review from Helen Zille last week, where she had this whole plan that she's planning how to create jobs, and she wants to call it something different. And she's talking on all the points we know are the hindrances and the problems in South Africa for foreign investing, coming into the country and actually stimulating that economic growth. Do you think there was any merit in her plan? Do you think she will be able to pull off some of that ideas of hers?
No, look, I think some of the ideas aren't particularly new. I mean, for example, they're very keen about the wage subsidy. We know that Treasury have done a huge amount of work on the wage subsidy, and it's a good idea that deserves at least a try. Unfortunately, we've seen in the latest ANC discussion documents and so forth that they're not overly keen on the idea, so it's difficult to see where we'll see that experiment taking place. But I think there are some good ideas there. And I think that's what we need to do. We need to have small-scale experiments and then apply them at scale if they show promise. So put aside ideological differences and so forth, and really just get to the grips with the key problem, which is unemployment, and tackle it head on, so that we don't have a looming disaster ahead of us, which unfortunately is what we're faced with at the moment.
Literally bringing it back to the basics there to stimulate the economy here for us. Thanks, Dennis, for your views there and helping us unpack this whole situation.